Okay, so 21, I think we are good to go. So good morning, everybody.
Morning.
Good
So,
morning.
Good morning.
of course, this is me speaking, and I know most of us have been desiring to have this time. My first apology is that I've been a bit busy and I've not had time with you people because as I've been posting on the channel, I'm a programmer. At the same time, I try to do some trading. Why? Because before I started trading, I was a full-time developer. Yeah. So when I rolled into trading, I had some layover clients who came with me. Like I have a company that is up and running. I have of course, my clients that I've been developing for them websites and apps all these years. And I also have a hosting company. So these are clients who've been on my board like around 10 years or so. So it was a company that was up on its feet and running. So I was not able to push like all the clients away. So I'm still having those clients, so sometimes the development part still takes hold of me as much as I really want to do full-time trading. But I'm in the process of like trying to automate most of the stuff and bringing on board other developers so that I can be able to outsource most of this stuff. So that why am I going like fully into trading is because if you've been in this game for a while, you know the potential that trading has. And of course, there are ups and downs. You must sit down and learn. There's a very steep learning curve. But again, if you truly committed to it, within 1 year, you will get your financial freedom. If you don't allow yourself to be distracted and you also don't allow yourself to maybe lose hope, because as I said, there's a very steep learning curve and it will include a lot of heartbreaks, it will include a lot of blowing of accounts, it will include a lot of self-determination, because in this field you will not even find anybody to encourage you. It will include a lot of walking alone in the forest, darkness, not knowing where to go or how to go. So it includes all that kind of stuff. And then also getting a lot of scammers outside here, like, there are so many things you will meet in this trading field. And needless to say that even in that, it is still all a learning process. So anybody who's going through that at the moment, I want to encourage you and tell you, yes, it is possible, it is doable if you just don't lose hope. And the unfortunate bit again is that it will also involve some of your money. If you've never lost anything in forex or trying to learn, oh my god, you're still a baby. I've lost. Let me ask everybody to mute their microphones, please.
What?
Mute your microphones, please.
75. 25.
Mute your microphones until when I'll give you room for questions. So just like 2-3 minutes introduction. So as I was saying, if you've never lost any money trying to make forex work for you, you just a baby. I'm not like
Huh?
trying to tell you you must lose money, but that is the
I
reality.
just,
Yeah, it is a
I get
reality,
it. You will get
and
profits. I
you will
get
grow out of it with the time. You will gain some
correction. I know
muscles.
we first find the ground. This is
Please
very, very
mute
that
your
I know this
mics.
work.
Mute your mics.
You don't want the good.
Okay. I think a few people have not muted their mics. So as I was saying, I'm not trying to discourage anybody or anything, but just be prepared. Like when you're coming into the forex field, it is a bit of a rough playing field. It's not smooth. But this is hope for you again, in the sense of a smooth sail never makes a perfect sailor. Like you have to go through the roughest times and turbulences and seasons and everything for you to be able even to know and to understand what you're trying to do. Okay. So of course it will also involve a lot of looking for the right mentors in place, and doing a few strategies here and there, and trying to find which one works for you. And take this from me as a fellow trader. I'm not that kind of a person who is like, I will promise you the moon and not give you even whatever expectations you came in with. All I tell you is that as a mentor, I will show you the tricks, but you must be able also to roll your sleeves and work for it, okay? Because this journey is not a, if you come in with this mentality of letting somebody else do the work for you, it's a bit unfortunate. Let me tell you the truth. It's a bit unfortunate. And that is why you find even in my channel, when I get time to give signals, yes, I do give signals, but I don't encourage people to depend on signals, okay? Because in the long run, when I stop giving signals, you will find yourself like you are not in a position to trade independently, okay? Yeah, well, fortunately or unfortunately, yes, I'm going to offer the signal soon as part of being in my Telegram channel. I will start offering signals, but it was not my intention to. It's only because I'm receiving a lot of requests in my inbox, like many people are waiting to trade with me, or like I don't even know how to say it. But yeah, I will start giving signals as a different package from what has been like happening in the VIP. But that is just maybe small part of what I'm preparing in the coming or 2 weeks. I will start giving out signals, yes, but that was not my initial plan. Why? Because I know I'm a teacher, I'm a mentor, and I'm meant to impact people by training you how to trade, showing you the tricks that happens in the market. Trust me, trading is not rocket science. It is not rocket science. And if you're committed to learning, if you're committed to knowing what really happens, not being hyped by all the garbage that you're seeing that is happening outside here, if you're really committed, you will make it. It's very possible to make it. And just don't lose hope. All what I'm saying is don't lose hope and choose wisely who you will sit under, because I'm not going to promise you that it will be a bed of roses. Of course, it's not going to be smooth, but it's doable. Okay, it's very doable. So I think that was just my small introduction. And so let me, I think everybody can unmute themselves, and we're going to take questions one by one. Whoever comes out clearly and I understand what you're talking is the one I'm going to answer, okay? Okay, first question. Anybody ready?
Good morning.
Good morning.
For trading synthetic indices,
Yes.
I'm having issues like getting indicators that actually work. It
Okay.
may not be percent, but at least
Mm-hmm.
that is profitable at the long run. So that's just one of the issues I have, because I've actually blown accounts several times.
Yes.
I'm trying to come back and learn one or two things. I still have to
Yes.
having losses in trading.
Hello.
Okay.
An indicator that actually
Hello.
work on the long run, makes people.
Yes. Okay, let me answer that first question. When trading volatility indices, you have a problem with getting indicators that truly work. So all of us as traders or as students who are learning to trade, you understand that it is so difficult to be able to see the market and predict where it's heading. And I've kept on mentioning even in my channel, like you see my channel now, I'm so much specializing in boom and crash, but I'm trying to see out of it, like trading the other indices as well. But so far I've mastered boom and crash, like, it's on my fingertips completely. But when we come to other indices, you talk about the volatility hundreds and the others. One secret I will need to give you: all strategies will fail, all indicators will fail. The only thing that will never fail in trading, whether you're trading on boom and crash, indices, stock market, or currency pairs, is price action. Okay? The only thing that will never fail you in the long run is price action. The second other strategy that I can recommend in a very big way is the market maker. Okay. I've never also been able to master fully the market maker because of my being busy and everything. But market maker is another thing that will never ever fail you. Another tip for indices is that it follows price action very precisely. Sometimes the currency pairs do not like align to the price action patterns that we learn in the market and everything, but the indices align to it, whether boom and crash or the volatility, they align. In fact, the Nasdaq and the others that are not on the binary.com platform. We have the NAS 100, the US 30, you mentioned all that. It aligns so much with price action. Okay, so one tip that I will give you, you try to utilize the oversold and overbought points of any volatility indices, because as I told you, it so much agrees to the price action and it so much agrees to the patterns that are in the market. So always try to utilize the overbought and the oversold points. That is point number one. If you're able to do the candlestick patterns, well and good. If you're able to do the order flows as well, that is very good because it's still part of price action. So the third point, if you really want to also try to catch using indicators, you can always come and add the Ichimoku on any of your indicators, like the stochastic, even whatever I'm using here currently, I can still use the Ichimoku. Okay. And let your parameters be just default. Okay. But all these others should be plain. You can leave this one, Kijunsen and Kensan. You can use these two or just choose to use the first one. Sometimes I use both. So this Ichimoku on the indicator window, not on the main window, but on the indicator window. Okay. Every time the Ichimoku touches the overbought and the oversold levels, they tend to be very precise. Okay.
Pull my earphones off.
They tend to be very, very precise. Like you see, if we were using this alone and it reaches this point, and while it's reaching this point, our Ichimoku is still floating somewhere in the middle. You see, you could have gotten a few tips here, but it would have started ranging and come back past the point where you entered. So entry of indices, while the Ichimoku is not at the extreme, sometimes it can be a bit tricky. Okay, so how do you use the Ichimoku? Is that let it touch your overbought or oversold levels before you think of picking a position. Okay, before you think of picking a position in whatever time frame that you're using, and mostly try to do it on M5 and M15. Okay, another thing also that you can do, you can add the. You remember the other day I did the ADX indicator. So you can add the ADX indicator. Coming. So you can add the ADX.
Yeah.
You can add the ADX indicator And the ADX indicator will always give you the points when the market is ready to pick momentum. Like at this point here, if the ADX was here, it was supposed to show you that if you are at the oversold, it was supposed to show you that the bulls are coming in place now, okay? And as it is moving, because if you check on the ADX around all this time, it would have been below level 55 because it is working. So as the market starts getting back its momentum, the ADX would have shown you that we are going up. So indicators that will never fail you, never ever, is the ADX and the Ichimoku on the indicator window. Okay, so try to learn those small tricks of those, because as I told you, the indices follow price action very much. So the overbought and the oversold levels of these indices work very well. Okay, in whatever time frame you're trying to use. Okay, next question.
You mentioned you've mastered the boom and crash very well.
Yes.
So what tips can you share for us now to learn one or two things on crash?
Boom and crash. I know most of us go to YouTube and pick the fastest strategy that we get there. And can we mute our microphones, please? Can we mute our microphones?
Mute everybody from your end.
Okay, so boom and crash is, as I've mentioned on my previous comment, it still follows price action. It still follows price action in the sense of, you know, even the price action is, don't try to catch spikes while the trend is opposite you. And how will you know that? Like at this point here, where it was ranging, two things will happen. Either the market will break in the down direction, or the market will break in the up direction, okay, after a ranging session, okay? Now, when it is on an up direction, if you are able to see even the Ichimoku is at the bottom here, don't try to catch the spikes while we are on an uptrend. You will be wasting your time. So the secret with boom and crash, first is know your trend. Completely. Know your trend. Second thing is try to catch spikes on the opposite direction while it's coming down. Okay? While it's coming down, try to catch spikes at that point, or try to catch spikes around this area when it is ranging. Those are very sweet points. Like if it is ranging like this, just use the normal Bollinger Bands, and you will be so amazed to see that every time it touches the top of the Bollinger Band, it will spike down. Every time it will touch the top, it will spike down. So on a ranging market like here, use the Bollinger Bands. On a ranging market like here. On a trending market like this, don't try to catch the spikes. If you have a better strategy or even on M15, you can ride with the trend. Okay, you can ride with the trend and trade it as a normal currency pair, not as a boom and crash. So you can get this wave going up. And if you are on a downtrend, you would always catch this, especially it always gives you fast indication that we will be spiking from this point. How will I know that? Let me go to, I'm trying to get, let me go to M1 and try to see what happens before various spikes come, okay? Take, for example, this has been a long uptrend, okay? We can clearly see this has been a long uptrend. And probably why long uptrend came, you remember our Ichimoku that we added is down here. So it tells you that this could be the end of the sellers in the market, the buyers are okay? So anytime the Ichimoku is coming from the oversold region, don't try to start catching spikes anymore. Instead, the trend will be paying more against you. Okay, so around this point, don't try to catch the spikes. How will you know that we are at a point now where, can we mute our mics, please? Can we mute our mics? Hi. Can we mute our mics? Okay. So if our Ichimoku is coming from down, like it has touched level 30 or 20 or whatever levels you're using as oversold and overbought, if it is coming from down going up, don't try to catch, because at that time the trend will definitely be against you. So how will you know that the trend is ready to change? Most of the time, when this the Kinjun-sen, the 9 Kinjun-sen line reaches level 50, sometimes it will spike and maybe go down a bit and then continue going up. But your sweet points will be when it reaches the oversold region, overbought region at the top, okay? So how will you know that we are ready to start spiking going down? The first spike and the second spike, and Matthew, this is 500, and it also happens the same even on 1000. The first spike and the second spike will be barely 12 candles away. Yeah, 12 candles away. And you see, it is still going up. It is still going up. While here, our RSI, even this one on the TDI, our RSI is slanting down. It tells you that the market is losing momentum. Okay, the market is losing momentum. Come and check even this other line that we were using here. This line, this peak is higher than this peak, and so that is why we are on a higher. So if any time, whether you're using an RSI or whatever you're using, so the initial peak is lower than the current one, know that we are still on an uptrend. Okay, but the moment we change and start spiking on the same zone, you see here and this one, so it would have told you that from this point now, we might start going down, because this point and this point are almost on the same level. Okay, so from here to here, now you see, like from this difference here and here to here, this was longer, this was shorter. So the nearer you get to more spikes, the shorter time the difference will be. As much as this one is still higher than this, but the difference here is very small from what happened here. So immediately you get now this, know that your spikes will be coming in handy because of the small space here than here. And our indicator, the RSI, has started going down. You see, it has started going down. It is slanting down, while on the main chart, it is going up. So this frequency spikes every 10 candles or 5 candles will tell you we are going. So from this point, I can always start placing trades from here as I go. And the moment the first one will come, you can close your trade, but this is a trade that you will always ride with it down for some time, okay? You will always ride with it down for some time. So just look through all your currency pairs. The 1000s might not be very exact, but the 500s are exact. There is no way it will miss that. There is no way it will miss that, unless if we had not touched the overbought, if our Ichimoku had not touched the overbought, okay? If our Ichimoku was not on the extreme, is when you will find this kind of setup, the ranging one. And you see, even our Ichimoku is all directly on the middle line. So this ranging market, as I told you, you can use the Bollinger Band. Like when it touches the top, it spikes, touches the top, it spikes. So this setup here, you use Bollinger Band. This setup here, you use the overbought, which is the Ichimoku. Okay, so I think I've answered that. Come and check again here. So we've been on an uptrend for a while. Okay, and then these two happen almost like immediately. But the difference from the small ones come, those small ones also sometimes are an indication that it will come soon. So this small one comes and then a bigger one and then a bigger one also. But it still goes against us for some time. But the difference between here and here is not much, okay? Come and see again what happens here, how the market behaves when it is ready to spike. Two instantaneous spikes come, like a small one and then a bigger one. So when you get this, know that the strength of the market is coming to an end. Yeah, when you get this, that is almost like immediate. And at that time, we are also at overbought. So just start placing your trades from here, and from there you will find 3 or 4 more spikes coming your way, as long as you are at overbought or oversold. So you will always get these indicators that the market starts spiking quickly anyhow, you see, because the trend at that time is being executed. Okay, so do we understand that? So you don't need to catch all these spikes as you're going up. You can always ignore, and also note that not every spike is for you in the market. But you can always try to just find these sweet spots and reverse with the market. And so this will give you 3 to 4 spikes. Okay. So next question.
Hello.
Okay, endurance. Your question?
Good morning, madam.
Good morning.
Thanks. Thanks for explanation. I've been following your strategy over time. It has been big fruitful.
Hello. Mine is.
Please, can you compare the Ichimoku and the TDI, which I love so much?
Yes.
I want to.
Just finish. Yeah.
Okay, I want you to use it both 5 minutes, 15 minutes, and 1 minute M1 to analyze it.
Okay, yes, I can do that. Now, when you come to this point here, note that the overbought and oversold will always work on 1 minute, but the main time frame that will determine your direction is the 5 minutes and 15 minutes, okay? So it is always good to start on the higher time frame and then come down, But also please note that that does not mean like you will rule out M1 completely. Why? There are those phases that M1 also will still give you opportunities, okay? Like you see from this point, it acted completely from down to up and then came down again, like this point, yeah? But M1 will always give you those, the Ichimoku specifically is for direction, trend where it's heading, yeah? But the TDI is now, after you've checked your direction, then the TDI comes in, okay? So for me, I use the Ichimoku to know where I'm heading. Like if at this point I know definitely the trend is ready to reverse, then I now come to my TDI, okay? And you see when the TDI came here to the market baseline, it started spiking down. As long as we've known now that the trend has changed in our favor, okay? So come and check this point again. When these ones were showing us that the trend might be getting tired, you see, come and see. All this while we were on top and the RSI of the TDI is very tired, but very extreme at the top. And then those small spikes came. While we are trying to go up, the middle line here, the market baseline, became our first spike, okay? So if this gave you an indication that we might be heading down, then the second one definitely also must have come on our market baseline, okay? So as much as it still went against you for some time, yeah, here, and then spike came. So the second one again had to come and set itself when it reached the former point, you see. So TDI I use for immediate signals, like after I've checked the long trend on the Ichimoku. So how I use it on M1 is the same how I use it on M5. Okay, so let's check how on M5 it behaves. Sorry, my net is a bit slow. So on M5, it will still apply the same. Come and see here. While the trend is going to go up, our Ichimoku here is on our 50 line. You remember I kept on telling you all the time, when we want to go on an uptrend or a downtrend on a higher time frame, it will always start from level 50. Okay, so mark my words again. Anytime you find yourself, even the RSI, it will probably start from level 50 going up. That is now when the buyers are completely in charge. Okay, so our Ichimoku is starting from level 50. And here, you see, while all this, it was ranging, we were coming but ranging. And then as we crossed the market baseline and level 50, that is when we started going up. Okay, so all this time, the market baseline is showing me we are going up. So I will not try to catch spikes all this point while going up until we start ranging and coming down. So if you're on M5, you might miss a few of these that is ranging, yeah, until at least you come and retest the market baseline the first time. And that is how you start going down, okay? Come and check this one again. As it's going up, where does it come and retest? The market baseline, okay? So whether on M1 or on M5, and while it is retesting the market baseline, check where your Ichimoku is, completely at the top, very overbought, yeah? So if you're able to capture these points, like you are on the market baseline, your TDI is retesting the market baseline, while your Ichimoku is completely at the top. Know that that is a sweet point and the market will spike in your favor for a while, okay? So if you are on 1 minute and you are trying to still try to scalp these positions, it will completely wipe your account. So be very cautious with the trend. Be very cautious with the trend and know the overbought and the oversold levels, okay? And that will help you a great deal. And when we are in a downtrend, check here, we are heading down. Our RSI is really going down, while on top, we are somehow like on a straight line or even heading up. So when you see this kind of divergence or a confusion in the market, it doesn't know where it's heading. So it must come down and then reset itself and then start going up again. So the boom and crash, as much as it is spiking, but it still follows the price action. So get the bigger picture on the higher time frame and then come and trade on M1. And most of these strategies that we give for M1, they tend to fail almost 99% when we are on a strong trend, okay? That is why I always tell you it is very necessary to add price action to every kind of strategy that you're using, okay? So I think I've answered that. Next. If you want to ask, please raise your hand.
Yeah, good morning.
Yes, good morning. Who is this?
Yeah, this is Emerald.
Pardon?
Emerald.
Oh yeah, okay. And now I can get you.
Yeah, thank you for the teaching this morning. And, I so much appreciate your teaching. Yeah, my question is the first time you are buttressing the question of the first man that asked you about the indices indicators and the volatilities.
Yes.
So you made mention of market structure.
Yes.
Yeah, as a newbie, I'm hearing the market structure for the first time. Can you just give us the basic what the market structure is really involved about?
Okay, I get you. So that is a whole new, not even lesson, but it is a whole new strategy in itself. Nevertheless, I'll try just to touch on that a bit. Okay. So maybe I will put a PDF book on the Telegram channel after we are done with this session, and let me go to the volatility so that I can try to explain using those that are handles. The market structure is there is something that we call the market language. And the market language will always depend on reading the candles and understanding what it is telling us. First of all, there is what we call technical analysis. Technical analysis will always come like, I'm trying to pick a line. You come and place your support and resistances. Hope you know what support and resistances mean. Yeah? The support and resistance, the simplest language I can give you, where you stay on your floor is your support and your roof is your resistance. Okay? So when you bring that exact structure to your physical chart as you're seeing. So if you place a line, because the market reverses at one point, you know, like on a line, okay, or on a zone, okay. So if you're able to put lines or zones around the areas where you've seen, like they are mostly reversing from, and the easiest the easiest way, like if you don't know how to draw the trend lines, just use Bollinger Band, okay? Just use Bollinger Band and let the top band be your resistance and the bottom band be your support. Of course, there will be these levels again. You see, like this peak here and this peak here are on the same line, and the bands will never be able to pick that for you. So again, drawing lines will make it easier for you. So you just can come to M30 and see, like from M30, where has the market been reversing frequently, and mark those zones. Also mark the zones of, you see, like here, it was ranging. So if you draw a line around this place, you would get a straight line that would also come and affect this point here. Okay, so just put those lines across your chart on M30 or on M15. After you've put those lines, go now to the time frame that you want to trade in, and then see how the market will behave when they reach where those lines are. So that is the market structure. When you have those lines in place, you will be so amazed to know that the market does not go randomly from point just randomly. It will play along those lines. Okay, it will play along those lines. It never moves randomly or just blindly. Now, when you have those lines in place, I'm trying to catch my MT5. I pick a line, but it's not allowing me because of this. No, sorry. I'm trying to pick a line. I don't know what. Somebody is making noise. Like this zone here and this zone down here. This would have been a zone that could have captured your view, line at the top or at the bottom. So I will approach these zones with two perspectives. That if I'm ranging within this zone, I don't know where the market will break free to. Either it will go up or go down. So what I always do, I draw a line at the top and at the bottom. Anytime I will break free from that zone, that is where I'll place my trade, either going up or going down. I'll still do that strategy. I think it was a video for tomorrow or the day after, how to trade after ranging market breakout zones. Okay, it is part of it. And see here, it was ranging around this point, and the same area, you see like where our line is currently, ranging in that area. Come and see how the market again is behaving on this zone. So the first point is try to draw those lines and pick the points where you saw the market was behaving. Okay. Secondly, you can come and draw also. So there is the straight lines to give you the zones, and then there is the trend channels or trend lines. Like you draw from this peak going up to put your zone in this area into a tube or a channel. So anytime it will break out of that channel, yeah, anytime it will break out of that channel, then you will know that the market is ready for a breakout and it will now start going in your direction. So that is purely technical analysis. Like you don't need to have any indicator on your screen to be able to read that. But it will help you because when the market breaks out from one zone, it will always go to the next zone or to the next line where you had drawn before it starts, it starts consolidating again. So as I do this, can we mute ourselves, please?
Yeah.
Pardon?
Yeah. Before you continue.
Yes.
Yeah, you made mention of using Bollinger Band as the support and resistance to to get out the accurate lines and so the support and the Bollinger Band, the settings, will it be a default or that's to modify?
The best is at default of 2.0 and 20. That is the default. But sometimes you can modify the bands to go to 1.619 if you're able to write somewhere that. Modify the bands to 1.619 and then the middle line to go to 34. Okay, you see like what we are using here on our TDI. This yellow line that you're seeing is 34. Okay, so you can always modify to go to either 34 or 29. Okay. But the default is 2 and 20.
All right.
Yes.
Okay.
So those who feel lost by what I mean by technical analysis or market language or price action, it is just a hint that I had to mention because it's part of knowing forex. Okay, so go and do more research on that. Go and do more research on that. And then it is a course by itself. Of course, I will start adding that to my tutorials because in the long run, we'll not stick to the boom and crash alone. And even more so, knowing price action will help you even trading boom and crash more, okay? In fact, in a very easier way, because it will be giving you the exact points where the market is going to reverse. You will just not be using the Ichimoku while it's going up to the overbought or oversold levels, okay? Price action will clearly help you. You will be knowing the zones where it's going to reverse and where it's going to, all those kind of things. And actually, let me show you this indicator. And I believe I've shared in the channel. I believe I've shared in the channel. Shifted. SH something. It is used for support and resistance. I don't think it is this. Yes, this. You see, SHVED. It is used for support and resistance, like it marks the points for you. So if you're able to use that, this shifted indicator, especially for boom and crash on M5, mark the zones, it will give you the exact zones. And then when you come to an M1, it will be so easier for you, like knowing the places where the market will be reversing. When you have those zones, it is so easy to trade using price action, not generally using the indicators. The indicators only help us when we don't know price action. But when you have those zones, you can, trade even with a naked chart. Okay. So I was seeing somebody raising their hand. Felix? Hello, Felix. Hello. Okay, I don't think I can get him.
Mine, can you get, do you have specific reading material? Hello?
Yes, yes.
Can you hear me?
Yes, I can hear you.
Hello?
I can
I'm
hear
posting
you.
well there.
Who is this raising? Felix, I think your network is a bit poor. We can't hear you.
Reading materials improve on our price action.
This is Segun.
Yeah. Hello. Good morning.
Yes, good morning.
Yeah, Shagun. A while, I don't know if I lost it. A while ago, you mentioned a particular indicator that can actually tell you when price will reverse. Did you pull that out?
I didn't rule that out completely. All I'm saying is somebody is writing on my screen. All I'm saying is if you are able, let me tell you the truth, there is no perfect indicator that will give you the reversal zones, okay? There is no perfect indicator. All you need to get is know the overbought and the oversold levels and what indicator to use in those places. And as I told you, for me, when I want to know the overbought and the oversold, I use the Ichimoku on the indicator window, okay? Because when the Ichimoku reaches the overbought or oversold levels, it is definitely oversold and the market will no longer go against you for some time. You know, like even if it is M1, it will retrace either a bit to level 50 and then start going up again. So the Ichimoku, in my view, gives you those, like you really need to know those levels where it will reverse. So Ichimoku will give you. Secondly, if Ichimoku is not ready to reach the overbought and the oversold levels, you will always find it shifting, like it is going and coming back to the middle of the band, going and coming back. But the moment it reaches completely to the top, then it has no option but to start reversing. Okay, so that is just one indicator that will give you the point of the overbought and the oversold. Now, you need to add something else to that indicator to be able to know exact reversal, okay? Because that gives you the overbought and oversold. Then from there, add a second indicator, of which in my opinion, I always add the TDI, okay? By the time we are reaching the overbought and oversold, what is the TDI telling you? Am I at the market baseline, or am I below it, or am I above it, okay? Okay, so that is how I always add, like I have to use two indicators at the same time. So the first one is to just give you general trend direction, which is the Ichimoku, and then the second one is the TDI, okay? And I added also, like you can add the ADX. The ADX really is to sift bad signals, like if you're in a ranging market, like if the ADX was in this zone here, the ADX was in this zone here, so it would be below level 25. It would have shown you clearly that, you know, we will be ranging for some time. So if you understand how to use the ADX, come and add the Ichimoku for the overbought and the oversold, then picking the right positions using the TDI would be very easy, okay?
So please, can we get a setting for your Ichimoku indicator?
Yes. What I said about Ichimoku is, can you see what is happening here? I just added Ichimoku on top of this window. And the Ichimoku are these two lines that you're seeing, the yellow and the red, okay? Can you see what is happening here? Let's take it to the extreme. You see, it was on our lower level on a straight line for a while, okay? So when we are on this lower level, overbought. It will definitely not go lower than that, but it will start going up. Okay. When we come to the volatility 10, let me look for Ichimoku and just place it as you're watching. What you do, you just pick from your indicator, drag and drop to whatever window. You can use stochastic, you can use whatever indicator else you want to be on the background, and then you just come and drag and drop the Ichimoku on top. Let these lower boxes be none, like no color is showing, and then just use these two lines, the Dickinson and Higginson. Okay, just use the two lines with the parameters of 9, 26, 52. Okay, and put okay. So anytime this line will come below your oversold level, from there the market will no longer go below that. It just has to start now going up. Okay, it has to start going up. It doesn't have any other option. Hope you understand. So the Ichimoku is just to give you the overbought and the oversold levels as it is, because you know some of us tend to use the RSI. Like this QQE indicator is more of a replica of an RSI, you see? And yes, it gave you at the bottom here, which was exact because even our Ichimoku was at the bottom. And immediately the market started going up. But check here, it starts coming down and it tells you it's reached the overbought like almost immediately. Yeah, and our Ichimoku is still on the lower line where it is still in the buyer's area. You see, so it will be a small retracement because this was not our primary indicator, but our primary indicator here is the Ichimoku. Okay, so if this other indicator reaches the overbought level, while our Ichimoku is still far below, just know that this will be a temporary retracement and it will still go up in our favor until at least our Ichimoku reaches the top. You see, so Ichimoku gives you the general trend of the market, and then add the second indicator to show you where to enter the trade. Okay, so that is what I meant. Next.
Yeah. Hello.
Yes.
Yeah, this is Emerald again.
Yes.
Yeah. I checked through the Telegram. I think that was the day before yesterday. And these three indicators, this FOC and the QQE and it's the high. So I've been trying to to give you some studies and to get if it can be possible, to get at least if the question is, can the three indicators give us an accurate 95% accurate that okay is already at overbought, and how can we use it? My question.
Yes, I get you. What I'll tell you, Emerald, is I will never be able to, as we said, I don't know how to put this, but it's not like in a selfish way, but in a language, in a market language. I will never be able to tell you that this strategy is 95.5 or 98.what% correct. That is a lie, a white lie, a pure lie, okay? All you need to know is know that the market does not move blindly, okay? Secondly, know that the market will move from zone A to zone B, from zone B to zone C, from zone C to zone E. And it will create higher highs and higher lows as it is going. So that is purely price action, okay? So if you now bring in the indicators, just try to look for something that you will be complacent with, like you easily understand. I can give you what is working for me, and it does not work for you completely. All the strategies that are out there, 99% of them are working. only that it's working for some people and it's not working for others. Okay, so look at this here. When our Ichimoku is telling us it is overbought, yes, our Ichimoku is telling us it is overbought. And yes, you went with it because maybe you added this other indicator. It gave you right information, you went with it up. It reached the top here, it tells you it is overbought. No, this was oversold, this is overbought. So it reaches up here, it tells you it is overbought. Now it starts coming down. And you didn't add the Ichimoku in your analysis. Do you know, as I tell you, all the overboughts, like you see here, it was ranging on top. It will be telling you, you know, we are at overbought, we are ready to reverse, we are at overbought, we are ready to reverse. Yet it is a lie because our trend now is in a very strong uptrend according to what the Ichimoku is telling us. So what I'll tell you, if you want to catch proper trend, use an indicator that will give you the exact points on the indicator window of overbought and oversold. Forget the RSI, forget any other indicator. Just use something like Ichimoku, okay, as I've given you the last. So when this is completely truly at the lower level or at the upper level, then know that the market will reverse. Now from that point, choose something else that you will add on top of that to know where to enter into the market and where to exit. Okay, so I'll not be able to point out because all my indicators are based on price action. Personally, they are based on price action. Like the TDI, it is completely based on price action. Okay, why I don't want to go out of the price action is all the other strategies will fail, but price action will never fail you. Okay, and so with price action, I will never be able to tell you exactly that it is ready to reverse here because you must also check the market and analyze by yourself and know that we are ready to reverse. Okay. So are we together on that?
Yeah, I got it.
Yeah.
Sorry, good morning. My name is Minister from Nigeria.
Yes.
Please, the Ichimoku should be on which of the RSI? Is it RSI 81, RSI 31, RSI 10?
No.
What I said is just create another independent indicator window. Like here, I just can come even and use a stochastic. Where is stochastic? Here, just add stochastic to the main window. It creates for you a stochastics window like this. Yeah. And then you put the stochastic to be, let these colors to go away, or you can even just leave it and then come and drag and drop your Ichimoku on top of it. Okay. Now, let me show you those people who love using stochastic. Let me show you. So you see here, we've added stochastic. Yes. And this point was correct because our Ichimoku was also at the top. Yes. And it came down as we anticipated.
Right.
But this point here, was it correct? The stochastic. It was not correct because our trend has started coming down according to our Ichimoku. It has started coming down.
It's better.
Yeah. So what I mean is,
if I get you correctly, Ichimoku is best placed on stochastic, right?
No. Any indicator, you can use stochastic, you can use RSI, you can use whatever indicator to be the background. Why? Because the Ichimoku itself is not a standalone on an indicator window. Okay. When you drag and drop, it will go to the main chart. So you have to drag and drop it on another indicator that will just give you this frame. Okay.
But for the RSI, which of the RSI is best? You know, we have RSI 81, we have RSI 40, we have RSI 60. Which of the RSI is best suitable?
For 1 minute on spike, spike specifically is RSI 81 and 60 are giving you the exact zones. Yeah. But the default of trading with RSI is 14 on spikes. When you come to the other currency pairs or indices, RSI 14 is always like this.
Okay.
Yeah.
Okay, thank you. RSI 60, 81, and other time frame for RSI 14.
Yes. Yes.
Thank you. God bless you.
Yes.
God bless you, man. We appreciate you, man.
Thank you. Next.
Sorry, man. Before you go, this stochastic, is it this 531 that is the default that we should use?
Yes, yes, yes.
Okay, thank you.
Okay.
What about the money small? Is it finished?
Next.
Hello.
Hello, ma'am.
Yes.
Back to crash 500.
Yes.
Which one with for main chart, main window?
Yes.
Yellow line. What is this?
This is moving average 200.
200.
Yes, this
Okay.
one. Moving average
Exponential.
200. Method exponential
Exponential.
applied to close. Yes.
Okay. And then red line.
The red line is I think it's moving average 8. Moving average, no, 9. Between 8 and 9. It is always very exact. Like when it's coming down, it will spike on that moving average 9. You see, like here it touched its spike, it touched its spike. So this one is always when the trend is in your favor. Moving average 9 comes in handy. Okay, so it is moving average 9 applied to. No. This is a different indicator, adaptive moving average indicator. I will share with you guys, but you can add this. You can tools, chart, insert, indicators, trend.
Yes.
What happened? There's no problem. I just wanted to be very sure that it's
indicators.
fine.
So it is moving average 8 or moving average 9 here.
What about this one?
Let's put 9 or 8. We see the difference. Exponential close. Let me put that to.
Finish it first. Let's not go and bombard him with those.
Yeah, you see. So the moving average 8. The moving average 8. If you insert manually, you see where it passes.
Finish it first. Then once it finishes, and should the condition continue, will not then
Okay, ma'am. Okay.
Do I understand your question?
Is that right? You can go.
Enough, ma'am. Enough.
Hello.
Yes.
Can you hear me? Okay, finish your question, please.
Yes. Enough. Thank you.
Okay. Next.
Yeah. Hello.
Yes.
So, what's the best thing to use for the Ichimoku indicator? I see you're always on M30. You were on M30.
Yes.
So is M30 the best for the Ichimoku indicator?
No. I was just using a random time frame. So you can use the Ichimoku on any time frame that you want from H4 to M1. Yeah. But you always know that if you're in M1, it is a simple scalp. It is on, because as I told you, the higher time frames determine what happens on the smaller time frames. So if you're definitely doing the M1 and the M5, you will know that it is, short scalping, and then from there you will be able to close your trades faster. But if you are ranging between M15 and M30, you will know that it is a trade of 1 hour to like 3 to 4 hours. Yeah. But if you are of 1 hour and above, that can be a trade that will even go for long hours or even up to 1 day or up to 2 days. So it depends on what time frame you're using the Ichimoku to know your trend. Okay.
Yeah. And it works for both boom and crash, yes?
It works for all indices, stock market, whatever you can mention.
Okay.
Yeah.
Thank you.
Please, madam.
Yes.
So TDI alone cannot stand the test.
TDI
alone, yes.
Yes, TDI is good, but I don't use it as standalone. You know why? Because this green line that you're seeing on the TDI is an RSI, okay? It's just that it's been put within a Bollinger Band, okay? So,
RSI.
Yes, it is always an RSI. You can get it. It is RSI 13 or RSI 14 according to what you want to read. Now, this RSI, even when you try to trade using an RSI, and most of the indicators that are custom made really are RSI, like you see this QQE, it is also using the RSI analogy. You see, because you see the way the TDI is behaving here. See how it is behaving here. So this is RSI, this is RSI, only different names, okay? So why I'm not against or for the RSI is because the RSI will never be able to give me the exact entry and exit points except on spike on M1, like here now. I come and get it at the market baseline. But on other indices that are not spiking, it will never give you the exact entry and exit point. Okay, so that is why it is necessary to have one for showing you the trend, which is now the Ichimoku. After you've seen the trend that it is ready to reverse, now come into your TDI for confirmation. Okay, because this is purely an RSI. You see, and an RSI will never come in handy if you've not seen divergence. You understand that? If you've not seen a divergence, then the RSI will never work for you. Okay.
Okay.
Yeah, fine. I want to ask something also.
Yes.
To determine the at least the overbought and the oversold.
Yes.
With anything like both on PC and on phone.
The Ichimoku you can use both on PC and on phone. And as I've said, that is the only indicator that I can confidently say the times I've been in the market, I can confidently say it's worked for me. Yes. So it can be used on both phone and PC.
Yeah, I'm talking about the Zoom level. I mean, is this one
Zoom level, if you
does it
Zoom level, if you want to get a clear picture of the market, do the smallest zoom or the second zoom after the smallest. Okay. Yeah, so always try to squeeze out your screen so that you are able to get the whole picture of where the market has been coming from and where it's trying to go. That is the best. So yes, so either, but mostly I tend to use the second because you see now, like here, I'm trying to zoom out, but I think my buttons are hidden there. So when you zoom out completely, you will get like the real picture of what is happening in the market. You see? So from this point, you are so sure that we had reached oversold level. And so from here, if you want to scalp, you can start buying, going up. So it gives you like the real picture of what is happening when you zoom out. Okay, next question. I think we'll be ending in the next 5 minutes. And I don't think we'll be holding the second session from now because even this forum didn't fill, so I don't think anybody was locked outside who was able to, who wanted to come in. So I think maybe we'll hold it later in the evening or tomorrow.
Lisma,
yes.
The first indicator window.
Yes.
What are the other parameters apart from the Ichimoku?
This indicator here is called QQE, the one I shared 2 or 3 days ago on my channel.
Okay, I don't have the mobile. I don't have. I don't use laptop. I use a mobile phone.
Unfortunately, unfortunately, all custom indicators work only on laptop or desktop. There is no custom indicator. You see, these are programs or scripts that are created by independent traders like me and you. You see, but what we have on our phones is what the MQL community has engraved in the MT4 or MT5, and it's only these that are always available. So you will get this on your phone, but you will not get these other indicators that people buy from outside that are not part of the MQL community. So unfortunately, currently we don't have any indicator for phone, except only that what is in the default, what is in the MT4 platform. So how I always go about it is when I've installed and seen how it is behaving and the parameters like how it goes, I tend to compare with the next indicator, like is it comparable to any of the default that I have here on the phone. So as I've told you, it is called QQE. But when I come and check keenly, it is an RSI, okay? It is an RSI. So instead of using an RSI on phone, no, this on phone, I'll just come and replace it with an RSI and see how the strategy will come out. So it also involves a lot of trying to learn and comparing how it behaves. But sometimes I just do it on my desktop for any custom indicator.
Like the other one, I can see one of them is MA3.
Yes.
MA3, Ichimoku, I know that Ichimoku. That MA3, is it exponential?
Which one is that? This MA3. This MA3, I think it is this thin line. It's part of that. It is this small line that you are seeing this time.
Yes,
I cannot be able
great.
to differentiate because it is part of the script itself.
Okay.
Hello.
Yes.
I'm Eric.
So,
do you mind to say?
Yeah.
Do you mind to say the settings of the Ichimoku kindly?
Ichimoku. Yes.
Yeah.
9, 26, 50.
9.
And then colors are your own colors, what you choose. And then let these last 3 boxes be set to none, like no color. Or set it to be the same color as your background on phone.
Okay.
Yeah.
Thank you.
Any other question? So I think we shall end this session and we'll be holding another session. Okay, I've been talking about knowing your trend direction and I've been talking about moving average 200. Let me just touch on that before I close. You see how it is behaving on my screen. Anytime you are around area 200, the market will always be ranging and it is good for catching spikes. Yeah, anytime we are around area 200. But when we go above it, the spikes tend to go against us, okay? Until at least we come and break around. So of course, there's that time when we are ranging around this area for some time as it is waiting the M5 and the M15 to align up before we start now the uptrend, okay? So anytime you will find like 3 or 4 times, it has used this line as a support. You see it spiked here, spiked here, spiked here, and it's not going through. Know that the uptrend has started. And from there, you see it just comes now all the way, comes and retests, and then continues, ranges around this point, but still goes up to find the proper way of coming down. Okay, so here it retraces a bit, touches, goes up a bit, comes and goes down a bit. Just, you know, finding time for M5 and M15 to come together so that it will now start going down completely. Okay, so the best point to trade spikes is around area 200, around area 200, not when 200 is below us. Okay, it's around when we are ranging around area 200 and when we go below. For spikes, either you are around this area or you are below it. But the moment you see it just comes and touches and goes down, comes and touches and goes down, comes and touches, and now this is a very strong downtrend, goes down. And then immediately we cross. See what happens from here. The market goes against you for some time. Immediately we close. And then we range again around it, but now we are not going below it. So we are just ranging around it. And then from here goes up again, comes and crosses and then retests and goes down. So know how to trade using moving average 200. Like if you want to catch spikes, any rejection that came from level 200, it will be continuation of trend. When we are above it, it will not be strong trend going down. It's just ranging. For all this area, we are just going up. So if you want good spikes, is these points where the 200 is being retested. Okay, these points where the 200 is being retested. You see, like here, if you would follow our other indicators, it was aligning to our strategy. But since we are above 200, you will find it still ranging because we are above. But the moment we come below, the trend will be established. It will be going in our favor for long. The same way, when you go above it, like here, it will go against you for so long. Yeah. So the best area to catch spikes are this. When our 200 is just going across the screen. So no direction, no up, no down. Okay. These are very sweet points to try and catch the spikes. All these very sweet points. As long as our 200 is on our screen, it's very sweet point. Until at least when you see again here, when we crossed, it went now against us up to some point, up to around here. Then now it started. You know, the market also, even in spike catching, it uses lower lows and lower highs. The same way the price action uses even on higher time frame. Okay, so you find here it's coming, still trending, fat spikes, range of spikes, but not going down and neither going up. And then it picks from this point, goes up again, ranges for some time, goes up, but this higher high is higher than this one here. You see? So we are coming down, but still going higher, coming down, but still going higher, until at least when this point will be the same as this. Then it will tell you that the trend now has come to an end, the strength has ended, and so from there now we start going down. Okay, so if you're able to use the 200 as your navigation, especially on M1 or on catching spikes, it will really help you a lot because you will never be able to trade against the trend, which always is what wipes our accounts. You're trying to catch a spike and it's not coming. Okay, so I think that is what I wanted to bring up before we end this session. So thank you guys for having attended this session. And in case anybody still has any question, you are free to inbox. And I think that's it for this session. I've recorded and it will be available on the on our YouTube channel for the other people to watch how we've had this session, and I will let you know when we'll be having another one. So thanks for attending. God bless you and bye.